Good morning and welcome to our Ashworth Wealth Weekly Market Update. My name is Scott Thomas. This has been a very interesting last couple of weeks, actually the last month or so since the election. There's been a lot of news, a lot of speculation about what's going to happen with inflation, what's going to happen with Doge, what's going to happen with spending. Obviously, there's a lot of controversy in Washington. But one thing that I came across this week that I thought maybe, kind of take it away from the political side of things this week and really kind of get back to fundamentals. There was an article that I came across. It's something that we've been watching very closely. It's commercial real estate. Um, as many of you know, we have an office not only on 106 South, but we also have an office down on 2nd East and 2nd South. It's been very interesting to watch that building down there over the last 3 or 4 years. We've been in there for about 10 years, and so we went through COVID, and it's been very interesting to see how that building has been almost vacant or close to, well, during COVID, it was almost vacant, and how it's slowly coming back, but there's still a lot of empty offices. So we've watched that really closely and wondered kind of what's going on with commercial real estate. I came across an article this week that talks about commercial office space around the country, and I want to kind of talk about that, kind of go through some numbers, and kind of talk about what we think that means. And I did a little bit of research. It looks like in Salt Lake City right now, the commercial real estate has a vacancy rate of about 20%. However, I wanted to share some numbers nationally. Um, on this chart, it shows office space absorption. And basically what this is the relationship between office space that's coming online and office space that, well, occupancy minus office space that's being vacated. And what we see here is obviously during COVID, the blue line there on the bottom, there was a lot of office space that went empty, and that has continued. And we just saw our first in the first quarter of this year, we're starting to see the first positive commercial real estate occupancy that we've seen in a number of years. So I wanted to kind of talk about that and kind of talk about why that is and what that really means for the economy. The first thing I thought was interesting is if you go back to April of last year, 34% of CEOs expected their workforce to come back to the office full time, or at least over the next couple of years. And the hybrid model of working from home and working from the office, or just working from home, that trend has completely flipped over the last year. So at the beginning of last year, 34% of CEOs saw that changing, where in fourth quarter, as the economy starts to go again, now that number went from 34 to 79. So 79% of CEOs that were asked this question expect to see people back to the office within the next year or two full time. So that bodes well, number one, for productivity. It bodes well for vacancy rates in commercial real estate. So that looks good. So that was the something that I found this week that I thought was an indicator of where things are going. CEOs bringing those employees back, and I think things are going to get more productive, and that will help the economy. A couple other things that I wanted to talk about this week. Usually, when I do these, I talk about interest rates. I think that's still one of the underlying things in the economy that's driving either the contraction or the expansion or of the economy. Interest rates have been really interesting. Interest rates haven't moved very much. The average 30-year mortgage right now is at about 6.9%. Inflation right now is still sitting right around 3%. I know that is a little bit higher than targeted, but it's down substantially. Obviously, we've talked about that a lot in the past, but inflation is sitting about 3% right now. There is some concern with talk of tariffs and what tariffs could do to inflation. That remains to be seen. I think a lot of that is just threats to try and get people to the table to get better deals with trade. However, if there are tariffs, then I think that will bump up inflation a bit. So about 3% right now. The other interesting thing is the Fed. And the Fed, I know that President Trump came out here a week or so ago and said that he would pressure the Fed to lower interest rates. The Fed is holding put right now, and they are kind of in hold mode right now. They want to see what's going to happen with tariffs. And so as of right now, the Fed is saying, look, there may be depending on how inflation goes and how tariffs go, there may be something maybe middle of the year to end of the year as far as a rate cut, but as of right now, they're holding put. So we don't see any real substantial changes on that until the tariff situation kind of levels out and we kind of know what's going on with that. So anyway, just some interesting information with commercial real estate, and I really do think that as commercial real estate goes, so goes the economy. As companies are renting more office space, as they're filling up that office space, that usually is a good indicator. It's usually a very good leading indicator of where things are going. So I thought that was a very positive thing this week. Again, we're grateful that you join us each week. Please feel free to share this with friends or family or anybody you think would benefit from it. And if you have any questions or if there's anything specific that you would like us to cover, please let us know. Thank you. Appreciate it.